A lot of investors are curious when revenue's down 4%, how you managed to raise your targets. How are you doing that?
Well, listen, we had another very solid quarter where we grew the company 1% when you exclude the Tier 1 sales and the currency impact, but we delivered an incredible strong performance on operating margins, EPS growth, and robust cash flow. And the reason why we are able to do that is because we are continuing to drive our mix shift to higher value product and services. And obviously the actions we took last year with our HPE Next program are paying off. And that's why we were able to improve our operating gross margins by 200 basis points and 110 basis points sequentially. So that gives us the confidence to raise our guidance because we see the momentum on our profitability. And at the same time, we continue to drive our growth in our key strategic areas. We had very strong performance in high-performance computing, up 25%. Our composable cloud, which is very unique, that brings the public cloud experience economics on-prem, 78%. Our hyper-converged infrastructure, 25%. And then services so critical. And our GreenLake, which is our flagship offering in a consumption-driven model, was up 39%.
You mentioned supercomputing. Obviously, everybody's familiar with the Cray deal announced just a few days ago. How much of the Cray is built into the guidance?
None, because that transaction will take a few months to close. And as we said in my opening remarks last Friday, that transaction will close in the first quarter of fiscal 2020. And I'm incredibly excited about the transaction because at the core of this is to enable customers to process the ever-growing amounts of data. And we see the growing in 3 particular areas: big data analytics, AI, machine learning, and simulation and modeling. And that requires an incredible amount of computational power that we haven't seen before. And therefore, you need certain characteristics that the current public cloud cannot provide. And that's why the on-prem solution with our GreenLake, with the Cray foundational technologies, is an incredible opportunity for us.
Antonio, you said a number of times on the call that the company didn't execute as well as it could have in North America. I think it was specific in part to just sales there. What went wrong, and what are you doing to fix it?
Yeah, I mean, listen, if I have to be a little bit self-critical here, I think we could have executed better in specific segment of the markets, and in particular North America as a geography. Well, we realized, David, at the beginning of the quarter, we had a certain demand that shifted in down market, and we didn't have the exact right coverage within the few weeks of the quarter to take advantage of that demand. So we know exactly what it is. It is sales coverage in particular segments of the market, and also realizing there is a technology transition here, particularly on the wireless side with the Wi-Fi 6. But I have to tell you, we know exactly what it is. We've made the changes. We're confident about that. And we have an incredible product and innovation that we already brought to the market, and excited about what we can do in the second half of the year.
Trade continues to be a concern for so many people, Antonio. You have an important JV in China, of course, one in which you have a put option that you say you're not interested at this point, at least, in exercising. What are you seeing in terms of China trade, and what are your concerns there when it comes to your ability to continue to have success at that joint venture of which you own 49%?
Yeah, I would like to clarify one thing. You know, we always tend to refer as a joint venture. The reality is we own a 49% of that entity. We used to own 100% 3 years ago, and but we tend to refer to it as a joint venture. So it's technically not a joint venture. It is a 49% ownership. We believe it's absolutely the right model. It has been an incredible success because that entity continued to grow very, very well and continue to expand profit. The reason why we highlighted this yesterday is because in May, I actually opened up the period of time where we could exercise the put option. And that put option today is valued 15 times trailing PE. And so we believe that setup is very critical, particularly in the context where we live in today. And so we have no intention to exercise that put option at this point in time. Maybe in the future we will reevaluate what is the best use of that cash for our shareholders and the company. In terms of what we see, obviously, you know, the tariff and the global trade continue to put some uncertainty in the market. But the reality is that the tariff we just saw in the last couple of weeks has no impact to us, very negligible. We already manage it, and that's why we were able to raise the guidance on our outlook despite the tariff. So for us, we are very excited. We have a very strong partnership with that entity called the UNIS. and that business is doing extremely well. And as I said yesterday, we are optimizing the profitability of that entity, which our shareholders are getting the value through the OI&E line. So very, very good, and we will continue to execute with them.
You know, the well-known Bernstein analyst, Tony Sacconaghi, put out a note before your earnings that got a lot of attention, called you a structurally challenged business, wanted to give you the chance to respond, said that you should consider M&A, buying a NetApp, for instance, to try to drive growth.
Yeah, I mean, listen, I respect everybody's opinion. And listen, we have been going through a transformation, and you have witnessed that transformation over the last 7 years. And we decided to build a purpose-built company that looks into the future and meet those customers' needs in a way no one else can do. So we are continue to shift our investments in the high growth areas. And obviously, you know, we continue to divest in areas we don't think are important. And a great example of that is the tier one sales, which we decided not to sell commoditized hardware. That has an impact. Let me remind you, at the height of that business, it used to be 20% of our compute revenue, and this quarter was only 2%. And despite all of that, when you exclude that, we continue to grow the company, and we continue to pivot to these high-value growth areas. I continue to think about innovation in three forms. Organic innovation, where we invest our dollars, and we have done a good job thinking about like in-memory computing or composable cloud or other areas like GreenLake. Inorganic, and listen, the acquisition of Cray will be my 14th acquisition, where I think about bringing IP, intellectual property, and talent to the organization to accelerate our strategy. And then the third is through partnership. And this quarter, we announced a partnership with both Google Cloud and Nutanix to give customers choice. So we are in that transition, but we are able to deliver very strong shareholder value. Let me remind you that this quarter we grew non-GAAP EPS by 31%. When I go back to the end of 2017, we actually delivered 96 cents per share on the year, and this year we're on track to deliver more than $1.70. That's an incredible journey, almost double.
Antonio, finally, very macro. I see non-U.S. net revenues almost, what, 2/3 of total net revenue. When it comes to the global economy, whether it's slowing growth, slower trade, or the dollar, can we agree, do you believe the coming year will be a tougher needle to thread?
Well, it's all going to depend on what's happened with the geopolitical situation and this global trade. Definitely, we see a little bit of slower growth at this point in time, and that's why I commented yesterday in my remarks that we see elongated sales cycles. So, but let's not forget one thing. The digital transformation will continue to happen. The ever-growing amount of data will continue to happen. 2 years from now, we're going to have twice the amount of data we generate in entire human history. That data has value. That data has to be put into some sort of business outcome. So that gives me confidence. However, obviously, all the things we hear has to be addressed to give the confidence in the market that we can continue to accelerate this journey and continue to make the right investment into the future.